I just bought more Mastercard. In this video, we are going to talk about this company, Mastercard, but also Visa. I'm going to talk about the fundamentals behind the companies, why the stock is going down, and the intrinsic value I have for Mastercard, the kind of returns I expect, because I just increased the position and it has now become my third largest position in my portfolio. This is my portfolio. My portfolio is public and anyone can go on the internet and check my portfolio. My portfolio is completely public. You have a link in the description. The third position of my portfolio right now is Mastercard, 12.8% of the position, and I plan to buy more as the stock continues to go down. Mastercard is a company I first bought in 2025 because the valuation became reasonable, and at the first moment it went up, and then during the second period it went down. So I'm taking this opportunity to average down. I'm taking this opportunity to make it a core huge position in my portfolio, because now I believe the odds of outperforming the market for Mastercard are pretty good. And I plan to make roughly 15 to 20% per year based on Mastercard itself. Okay, and I am building my whole portfolio in order to make 20% per year. Okay. In case this is your first video from this channel, welcome. My name is Christophe Nour. I'm French. I've been investing in the stock market for almost a decade now and have achieved a performance of 25% per year. So of course I want to continue making 25% per year, and I'm buying Mastercard for this. Okay, so first of all, why is Mastercard going down? I can show you the stock chart of Visa. It will show you frankly the same thing. These two payment companies are down for many reasons, actually. Let me show you the website in English. These two companies reached all-time highs during summer 2025, and since then they have come down and down and down. Look at this. Visa is following the same path. Visa is back to April lows, Liberation Day, and it reached an all-time high territory in June. For Mastercard, we are almost at Liberation Day, April lows, and we reached an all-time high stock price in August. And in only 6 months, the sentiment has completely shifted. Back in the days, 6 months ago, people said Mastercard was the best business of the world. The outperformance was very clear, beautiful margins, inflation hedge, and now you just need a little bit of a price drop and the sentiment is strange. You can no longer find a YouTube video on Mastercard and Visa without people worrying about risks. And now people talk about all the risks actually. You have competition from Europe, new regulation, new regulators that want to move away from the rails of Visa and Mastercard. You have a new payment system in Brazil. You have a new payment system in India, and it is working. It is taking more market share. At the same time, you have the US president that wants to have new laws that will maybe impact Visa and Mastercard, like having a credit rate maximum of 10%, and they want to limit the swap fees. You have new laws in Illinois where this swipe fee thing is passing. You have a new law that passed very recently, Illinois swipe fees. I've seen very few videos on YouTube about this. From this website, it's 2 days ago. Illinois law banning swap fees on tips, taxes, upheld. So this is moving. This swipe fee thing is moving. Not for all the payments, not for all the states, for only Illinois, and for only tips and taxes. For the rest of the order, they had swap fees. But it is starting to get motion and people are freaking out. What if these swap fees are changing? What if this duopoly is changing? What if the profitability is changing? Now you start to get motion, people freak out, and these stocks are going down and down and down. What can I show you? Mastercard, now we are down 12% based on fears.
By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video.
If you look at the way Mastercard and Visa are built, they are built for resiliency. And I don't believe these problems are long-term. Even if you think all the states in the US will go through this new swap fee structure of imposing low swap fee for tips and taxes, it will only impact 1 or 2% of the revenue for Mastercard. So even if new motion goes through and it propagates to all the states in the US, it will not make any impact on the business model. Okay? So I think people freak out because of too many headlines. So I started this video saying, why is Mastercard going down? First of all, you have this. You have the motion, you have tweets from Trump, you have tweets from the US administration about credit card fees, and also swap fees, and you have some motion, so people freak out. 2, regulation. This week, as I'm recording this video, Europe and some people in UK had a meeting to move away from Visa and Mastercard. Europe wants to move away from Visa and Mastercard just in case the US imposes more tariffs. So maybe Europe will have a way to defend themselves and cut Visa and Mastercard from the network. This is not the first time they try to do it. Not the first time. And it has failed in the past. So it has failed because Europe is very complex. And it's difficult to reach a conclusion if you have too many members sitting at the same table. The countries are not the same. The culture is not the same depending on the country. So it's very difficult to align the interest, have right incentives for everybody. Now Europe is having a bank-to-bank transfer system. Okay, so it is taking more market share. Is it impacting Visa and Mastercard for the moment? No. The fundamentals for Visa and Mastercard keep on improving despite the new regulation. In India, Brazil, Europe, revenue is up and to the right. Net income is up and to the right. I mean, Brazil, India, new regulation have been here for 3 years now. Do you see any impact for the past 3 years? I don't think so. So I'm gladly betting against these fears because the business is excellent. I recently made a video saying the earnings report of Mastercard is a 10 out of 10. Despite these new regulatory hurdles, Mastercard is growing earnings at 20% per year. So the worries are here. The new regulations are here, but Mastercard is not impacted. And guess what? Even if Mastercard is being impacted with new disruption in payments, actually, Mastercard can have a nice edge. You have 2 segments for Mastercard. You have payment network and value-added services. And if you look at the past quarters, these 2 segments are converging. In the past, the payment network was 65-70% of the revenue. Now that's 55%, which means the new segment, not related to payments, went from 35% of the revenue to 45% of the revenue. So it is getting more importance. If all these bad regulations go through, and if Visa and Mastercard are really disrupted, Europe moves away from Visa and Mastercard, well, out of the 2, Mastercard is a better hedge. Mastercard has more resiliency because of this blue line, this blue segment that is growing 20% per year. So even if all the fears are right, and even if all the world is moving away from Visa and Mastercard, which is very unlikely, Mastercard is exposed to the world with this blue line, value-added services with nice margins, cybersecurity services, information. So I don't worry much about the terminal value of Mastercard. And with all these fears, you can look at the cheapness of Mastercard over time. You can go to Stock Unlock, to Scores, which is a new tab, and you can go here. You can see that over the past few years, Mastercard has oscillated from being red, expensive, to green, cheap. What can you see? You see that the stock was cheap in April 2025 and then rebounded to fair value, and now it is back to cheap. And I gladly took more shares on the way down. I bought more Mastercard at a price of $516 here, and I'm a happy buyer. Right now the stock is not expensive. The stock actually, I can go through the valuation models for you. If you look at the price to free cash flow right now, the stock is not expensive. This is what you have. Here is your price to free cash flow over time. In 2021, the stock was expensive. Look at this. Going into 2020, the stock was extremely expensive, P/E ratio of 40. So in 2021, it was also expensive. In 2024, also expensive, price to free cash flow of 40. And now the price to free cash flow has dropped to 27, or roughly 27, 26, depending on your estimates, which means we have a low valuation compared to the past. If you look at the multiples compared to the past, we are rather cheap. And we are rather cheap for many reasons. I don't think these are valid reasons to be bearish, actually. You can look at all the comments from the management team for Mastercard and for Visa. They are talking about this, the new regulations, but also new technologies. For example, stable coins. They are integrating stable coins into their payments. Also, tokens, they are tokenizing the world. Also, AI, they are using AI to improve their process and their efficiency. So maybe there is another reason. People think that AI will allow people to vibe code their own payment network. Good luck to them. So compared to the past, Mastercard is cheap. Cheaper than when it was in the past. And we have the lowest valuation we've seen since 2022. But what about the growth rate? What is the free cash flow growth rate the company had for the past years? Is it really declining, being impacted by the new world order? I don't think so. I can show you the average and the median of the free cash flow growth. And you will see that for the past decade, you can see at the left here, the average has been 19.6% per year, so 20% growth rate in free cash flow, and the median 16. Even if you look at more recent data, here is what you have. I can show you since COVID. Since COVID was a bad year for them. You can see free cash flow went down during COVID because the world entered the lockdown. Even if you take into account this bad period, the free cash flow has grown at 17% per year. So what about valuation? If you think the free cash flow will grow at 17% per year for the next 5 years, and if you think the company deserves a price to free cash flow of 30, which is normal for a premium business, it's a premium valuation, and if you think the business will continue to do buybacks of 2% repurchase of their shares every year, then the stock is 60% undervalued right now. The fair value is 800, and if you buy right now, you can expect a CAGR, a compound annual growth rate of 20%. You can play with some numbers on this DCF model from Stock Unlock and use 15% growth rate in free cash flow. If this is the case, Mastercard is 46% undervalued. The fair value is $770, and the CAGR, if you buy now, is 19% per year. And these could be fair estimates for me, actually. What I think will happen. It's pretty likely the free cash flow grows at 15% per year. Price to free cash flow goes back to 30, and they will do 2% buybacks every year. I'm not assuming any growth in dividends. So this could be my fair value of Mastercard. So I am buying Mastercard to generate 19% per year in the future. Okay, I think it's a pretty compelling price. And if you want to use this DCF model on Stock Unlock, you can use my discount code in the description. And if you want to use Fiscal AI here, you can try it out completely for free for 2 weeks. You have a link in my description. So I believe Mastercard right now is hated for almost no reason. Headlines, bad news, people freaking out about AI, but none of the reasons are fundamental. You can look at what big super investors are doing with Mastercard and Visa. You can look at one of the best investors of the world, Chris Hohn, that is known for doing like 18% per year for 30 years, 20 or 30 years, concentrated portfolio, quality portfolio. He has recently increased his Visa position by 50% a couple of months ago. So out of all the moving things in this new AI world, one of the best quality investor in the world, known for investing in companies with competitive advantages, is increasing its Visa position enormously in a big way. So it's not as if super investors were leaving the boat. Some of them are buying in a big way, and I'm on their camp because now Mastercard is a huge position for my portfolio. So I hope for the price to stay the same and not rebound so they can do massive buybacks. But I believe now with this valuation, it's pretty enticing to buy more Mastercard. So yeah, I believe Mastercard is an excellent company that shows no sign of being disrupted at the moment. The fears are overblown and the stock is rather cheap. So I'm happy to buy the dip.
If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn my strategy to generate 25% annual returns. You will learn how to find winning opportunities. You will learn how to properly value any stock, when to buy, when to sell, so that you can build a strong portfolio filled with great companies. Additionally, inside this coaching program, you will have access to an exclusive community of like-minded investors, and also you will have my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need for your email address, just click the link in the description and I'll see you on the other side.